moving markets right now are coming from very different directions. We are looking at war, regulation, AI, crypto, and even alternative assets. All of them are telling us something important about where market is moving and how the system is changing. So today we're going to break it down clearly step by step. Let's start with the biggest global story because the situation in the Middle East is getting more serious. Over the weekend, Iran struck a major industrial infrastructure in Iran, including one of the largest aluminium plants in the world. At the same time, Yemen entered the war more directly by firing missiles at Israel. So this is no longer just a conflict between two sides. It's expanding across the region and is starting to hit the real economy. And that matters because once heavy industry, shipping routes, and energy chokepoints are under threat, this becomes much bigger than a military story. It becomes a global market story. We're going to talk about risk to aluminium supply, oil supply, shipping lanes, and trade flows. And if both the Strait of Hormuz and Bab el Mandeb come under pressure at the same time, that could be something markets have almost never had to price in before. So we'll break down exactly what happened, why it matters, and why this could hit inflation, stocks, and crypto from here. Then we're shifting to the US, where another major fight is playing out. And this one is about prediction market. More than 20 states are now going after Kalshi. So the big question is very simple. Is it a betting platform or is it so-called financial derivatives? Because on one side, Kalshi said is offering financial contracts regulated by the federal government. On the other side, states are saying this looks exactly like some gambling website and should be treated the same way as sport books. Now, this may sound like a niche legal battle, but this is actually much bigger than that because if Kalshi wins, it could reshape how a whole new category of markets operate in the United States. If the states win, it sends a strong signal, a strong message that you cannot just rebrand gambling as financial innovation and expect to avoid local rules. We'll also talk about the added controversy here because these platforms were even taking bets on war outcomes or military actions and whether the US would send troops. So now, this is not just a regulation story. This is becoming a fairness story, a security story, and possibly even a Supreme Court story. Then after the break, we're going to dive into AI and the future of the work. So some Hollywood actors are now pushing something called a AI text. So the idea is very simple. If a studio uses a fake AI actor instead of a real one, the studio should still have to pay like hire a real person. That tells you where this conversation has moved. We are no longer debating whether AI can replace human work. We are now debating whether companies should have to pay for that replacement. And this is important because Hollywood may be the first battleground, but it will not be the last one for sure. If this model works, people in other industry will start asking the same question. Writers will ask, designers will ask, creators will ask, and even tech workers could also ask. So we'll break down why Hollywood is moving fast on this, why the studios are pushing back, and why this fight matters far beyond movies. From that, we'll move into one of the most unusual market stories of the day. So Logan Paul turning a Pokémon card into a $16.5 million sale. Now, on the surface, this sounds just like a crazy headline from Logan Paul. But beneath it, there's a serious investment story because we are now seeing collectibles increasingly treated as alternative assets. So rare cards, rare items, those sacred cultural assets, they are starting to attract the same kind of thinking that investors normally apply to Bitcoin or gold or other hard assets. The logic is scarcity, scarcity or brand power and global demand. So we'll talk about why that card became so valuable, why investors are paying attention to this space, and why this sets something bigger about where capital is looking for value right now. Then we'll bring it back to crypto because one of the most interesting signals coming out of the industry right now is OKX. While many crypto firms are trying to rush toward public markets, OKX is doing the opposite. They are slowing down. And the message is very clear. A weak IPO does not just hurt one company, it can hurt like the whole crypto industry. And this is a very important statement because for years, crypto has often been driven by hype, timing, and momentum. But now we are seeing one of the major global exchanges say very openly that long term trust matters more than short term attention. So we'll talk about why AKX is being so cautious, why they think bad public listing damage crypto's image, and why the bigger focus right now is global expansion and tokenized finance. And finally, we will also cover a very important regulation story coming out from Taiwan because Taiwan is moving to regulate crypto KOLs and signal groups. In other words, the days of random influencers giving trading calls with no rules around it may start to come to an end. This is a big deal, especially in crypto, where so much information flows through Telegram groups, Discord channels, thread posts, and social media personalities. Regulators are now seeing this very clearly. If you are promoting or recruiting or effectively giving investment advice, you may no longer be able to do it so freely. And this matters because it goes straight to the heart of how people in crypto get information. A lot of retail traders are not reading filings or studying market structure. They are following someone online. So if the rules around those voices tighten, the entire crypto content ecosystem changes with it. So we'll break down what Taiwan is proposing, why regulators are stepping in right now, and what this means for KOL culture across the wider crypto world. So that is a full lineup today. We've got war risk, oil, shipping pressure, prediction market regulation, AI replacing labor, alternative assets, crypto IPO strategy. So now we're talking about crypto influencers as well. And then at the end of the show, we've also got a guest, our usual guest segment. Joining us today is Daya, who's a Bitcoin educator and community builder who has been doing incredible work across Southeast Asia. She's the founder of Keyless Bitcoin and Indonesia Bitcoin Conference, and she's currently leading community growth for FADI in Southeast Asia. And this is a conversation I'm very, very looking forward to because we are going to move away from just price and headlines for a moment and talk about something deeper, which is like what Bitcoin adoption actually looks like on the ground, not in theory, not in pitch deck, but in real life. So we talk about how people in Indonesia are using Bitcoin, what the challenges are, how education really works in emerging markets, and how tools like FADI are making Bitcoin more practical for everyday users. So if you want to understand where Bitcoin is actually growing, what real adoption looks like outside a usual US market conversation, that is definitely a segment you want to stay for. All right, so that is, in other words, a lot to cover in today's show. So let's get straight into the fast news. And this is we have to start with geopolitics because it's getting more dangerous by day. We are now seeing like not just a war between two sides, it's expanding to the across the entire region and it's starting to hit the global economy directly. So what just happened over the weekend? Iran carried out a major strike. So they hit the largest aluminium plant in Iran, like one of the biggest in the world. Iran said this was retaliation for the U.S. in Israel attacks on its own steel industry. But here's the key shift. this is no longer just military targets. Iran is now hitting economic infrastructure, like industries that power entire countries. And of course, that matters because the Middle East produces about 9% of world's aluminium, and prices were already at a 4-year high before this attack. So, this is not just a regional story. This is now the global supply story. And at the same time, another front just opened. So Yemen's now entered the war. They fire ballistic missiles at Israel twice within 24 hours. Israel says it intercepted them, but the message is clear that Yemen is now very much involved and they are not backing down. They have already said they will keep fighting until the war stops across the region. And now, this is where things get very, very serious. Like we have seen this before. During the Gaza war, Yemen attacked ships in the Red Sea. They disrupted around $1 trillion in global trade. Now, imagine that happening again, because if they target shipping routes again, they could block another very important strait around the whole world. So Bab al Mandab, so that is another strait. So this strait basically carries around 12% of global oil trade and around 8% of global LNG. Now combine that with the Strait of Hormuz, which already carries around 20% of oil supply. If both routes are disrupted at the same time, that could be something we have never seen before. Okay, so like we are starting to see early signs. The world's largest shipping company has already responded to reports of drones and explosion near Oman. So this tells you something. Like shipping risk is rising, and when shipping risk rises, costs would go up. And other layer to this is like Iran's military has also issued a warning. They are threatening to strike the US and Israel university campus in the region. So this includes places like NYU in Abu Dhabi or Texas A&M in Qatar or Northwestern in Qatar. So they have set a deadline. If the US does not respond by 30th of March, which is today, they may take action. This shows how wide this conflict is becoming. At the same time, the US is increasing its presence, so around 6,000 to 8,000 additional troops have arrived. That brings the total to about 50,000 troops in the region. And according to the reports, the Pentagon is now preparing for a limited group operation that could last several weeks. So this is not slowing down for sure, it's escalating, it's building up. Now, on the surface, there are still talks happening. So, countries like Pakistan, Saudi Arabia, Turkey, Egypt, they are trying to mediate the situation. Pakistan says both sides are open to talks. Iran has even allowed some ships to pass through Hormuz. That sounds very positive, but here's the problem. What's happening diplomatically and what's happening on the ground, they simply don't match because at the same time, troops are increasing, strikes are expanding, and threats are still rising. So the gap is actually getting wider, not smaller. And as for the market's already feeling this. The S&P 500 had its worst week since the war began and its fifth losing week in a row. Oil is still trading above $100, and Donald Trump now set a deadline, which is on 6th of April. He says if Iran does not reopen the Strait of Hormuz, the US may target Iran's energy infrastructure. So the final takeaway, so here's actually the reality check. We are now about 1 month into this conflict. And every week there's a new front opens, new threat appears, and new talks begin, but lead to nowhere. This is not a war that is slowing down. It's actually the opposite. It's starting to look like World War III. This is the part we should really pay attention, like because this would directly impact oil price, and that means inflation and global markets and even crypto. If supply routes get blocked, Energy prices would go up, costs would go up, market would feel very unstable, and that affects every single thing from your investment to your daily life. And that is why we're paying very close attention to geopolitics, especially in this day and age, now that Bitcoin or crypto market is worth a multi-trillion dollars in market cap. All right, so if we have any more updates on the situation between Iran and also the US, we'll update viewers on Roxanne TV. But now let's shift gears a little bit, and I want to dive deeper into the Kalshi prediction market because this could reshape another new industry. Right now, there's a major legal battle that's happening in the US, and the question is very simple. People are asking, is Kalshi a trading platform or is just like some gambling website? So what just happened is that Washington, the state of Washington has just joined more than 20 other states suing Kalshi right now. And Kalshi, of course, the prediction market, that means people can place trades on real world events. For example, if we quickly hop onto Kalshi, the website, you can place bets on absolutely every single thing. Like, for example, will interest rates go up from here? Will a certain candidate win an election? Or will a certain geopolitical event happen? Now, here's the issue. The state said this looked like a SWOT book because you can see the odds. You can place a bet and you can get paid if you're right. So from that fee, this is gambling. And Kalshi is operating without a license. Of course, Kalshi would push back immediately. They are trying to move the case to federal court. So Kalshi's argument is very simple. They're saying they are not a betting website. They are financial platform. They say the products are, so what you see here, they're all derivatives, just like financial contracts, and should be regulated at the federal level and not by individual states. So this is where things get very interesting. This is just not one lawsuit. There are more than 20 legal actions across the US. So some states are filing lawsuits against Kalshi or banning the platform, even pressing criminal charges. For example, Arizona has filed criminal charges and Nevada has blocked operations. So this is actually spreading fast across the entire US. On one side, you have the federal government. So they support Kalshi. They believe states should not interfere. On the other side, you have the state government. They strongly disagree. So their argument is that if it looks like betting, it is betting indeed. And companies like FanDuel or DraftKings had to follow strict rules when it comes to getting the license or paying taxes or meeting the regulation need. So states are asking, why should Kalshi be treated so differently? And this is not just one company. It's also about who controls new financial products because prediction markets sit in a gray area. They look like trading or at the same time they look like gambling. And right now the rules are very unclear. Even judges cannot agree at the moment. So some courts say this is basically sports betting, like states should regulate it, while others say this is just financial trading, so federal law applies. So the system is really split. And this could go all the way to Supreme Court. Now, here's where it gets very interesting and very, very serious. During the Iran war, platforms like Kalshi allow people to bet on, will the US send troops or will Iran close the Strait of Hormuz? And one trader reportedly made close to $1 million by correctly predicting military actions. That raised a huge concern because now the question becomes, did someone have insider information and could people profit from sensitive decisions like that? Because of this, US lawmakers are now pushing to ban war related betting completely. They are worried that people with access to government information could use it to make money, and that becomes a serious national security issue. So let's step back for a second. This is no longer just about betting. This is about regulation, or control, and also fairness. The federal government wants innovation, states want control and taxes, and now national security is also part of the discussion. So the bottom line is here's where we are right now. Over 20 states are now taking action against Kalshi. The federal government is backing Kalshi, though. Courts are very divided and lawmakers are getting involved. This is turning into a major legal battle, and until there's clear answer, this space will stay very uncertain. And if we have more news about Kalshi, of course, the first platform will break is on Roxanne Cleaving. So anyways, we'll take a short break from here, and when we come back, we are diving our tools into AI because Hollywood is pushing hard against the AI actors, and there is a possible proposal to fix that problem. So if you're intrigued, make sure you stay with us after the break.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index is collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
He's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxanne. One currency, one place.
How about stretch preferred stock on Roxome? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxome gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxome to your clients. Corporate traders, asset managers, old, young, Stretch on Roxome is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
We are in heaven at 11.5. 11.5%. 11.5%.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
Welcome back to Roxome TV, and thanks for sticking around with us after the break. Well, there is a big shift happening in the entertainment world, because now it's not just about AI replacing jobs. It's about whether companies should pay for using AI instead of people. So what just happened is that Hollywood actors through the union, so we talked about SAG, AFTLA, and they're now pushing for something called an AI tax. They call it the Tilly tax. The idea is really simple here. If a studio uses actress, her name is Tilly Norwood. She looks really real and she is really pretty and she has a profile and even has a social media account. So here, that's her IG. So her creator said she could be the next big movie star. That's what they claim. But here's the problem. Everyone is concerned right now because using AI actors can cut costs up to 90%. And of course, that is a huge number. And for studios, that's very attractive. But for actors, that is a direct threat to their jobs. Now, here's the key point. This is not about copying real actors. Hollywood already has rules for that. Like if a studio uses your face or your voice, they need your permission and they must pay you. But AI actors like Tilly Norwood, they are not based on a real person. They are built from data, from thousands of actors combined. So no single person can say, oh, that's my work. That is basically using my face. And that creates a gap in the system. So what the union is saying right now is that they're trying to come up with a new approach. Like since you can't stop AI, you can make it really expensive. So under this AI tax, studios pay a fee every time they use an AI actor, and that money goes into actor pension and also health funds. So even if AI replaces jobs, the value still flows back into real actors. Like, of course, studios did not like that at all. Their argument is saying AI actors are not real people, so they should not have to pay any union fees. And from a business point of view, once you create one AI actor, you can use it again and again and almost at no cost. That is a real advantage. So the bigger picture here is more like AI versus labor. This is not just about Hollywood anymore. That is a much bigger trend we're witnessing. AI is starting to replace human work, and now workers are asking, if AI replaces us, do we still get paid? Government rules on AI are still very low, but unions are moving faster because they have contracts and deadlines. And the current deal ends on 30th of June, so both sides need to agree soon. And AI is no longer just like the only problem. Actors are also very unhappy with streaming. In the past, they earn money every time a show reran. Now, streaming pays much less, so pressure is building across the industry. So the bottom line is like, here's what we've got. Like actors know they cannot stop AI, but they want to make sure AI does not replace them for free. And so the AI tax is sort of the way of doing that. This is where you should pay close attention actually, because this is not just about movies. This is a test case. If that works, we could see the ideas spread to content creators, to designers or writers, or even tech roles. And right now, that feature is still being decided in real time. And that's why we're paying very close attention here on Roxham TV. All right, so moving on to the next very interesting story we have to cover in this show. So this is one of the most unusual investment stories right now, because like one piece of cardboard just sold for $16.5 million. And this is not just hype anymore. People are starting to treat collectibles like real assets. So what just happened is Logan Paul, he bought a rare Pokemon card back in 2022 for $5.3 million. Last month, he sold it for $16.5 million, and that is a very generous 212% return in just 3 years, and it sets a new record to be the most expensive trading card ever sold. The buyer is a venture investor who now wants to build a business around rare collectibles. So this is no longer just a Pokemon card we are talking about. It's called the Pikachu illustrator card. So here's what it makes it so special. So only 39 were given out in 1998, and around 24 are believed to still exist today. This is the only one grade A, a perfect 10. So in simple terms, it is extremely rare, it's in perfect condition, and there's a strong brand behind it. And that's what drives up the price. Now, here's the bigger story. The entire Pokemon card market is moving. So if we take a look at the entire Pokemon card index, I mean, it sounds very stupid, but apparently it is a thing right now. So prices are up about 25% in the past 3 months. And in some periods, returns have even beaten the stock market. And that's why new buyers are entering, not just collectors, but also investors. The buyer described this as a part of the bigger strategy. So it's called the debasement trade. The idea is simple, like governments can print money and cash would lose value over time. So investors look for scarce assets instead. For example, gold or Bitcoin, and now rare collectibles. Because supply is fixed and demand can grow, and that pushes price to go higher. Now, this is very important. It's not the same as trading stocks because these cards produce no income, there's no dividends and no cash flow. The only way to make money is simply to sell to someone else at a higher price. There are also other risks. So, of course, it's much harder to sell the card quickly. There might be higher taxes in some countries, and it kind of depends on grading companies to verify the value. So this market depends heavily on trust, on timing, and also demand staying strong. Now, here's why this is not just a short-term trend though. Pokemon is a big brand right now. The brand is huge, over $100 billion in total revenue, the biggest media franchise in the world. And this is becoming more important. Like old fans are growing up and earning more money. New fans are entering the market. So in other words, demand keeps refreshing itself. But the bottom line is here's what it tells us. Collectibles are no longer just a hobby. They are becoming an alternative asset class, a new way to store value, but at the same time, it's still very speculative. So this is where you should pay attention because this shows how capital is shifting. Investors are now exploring assets outside traditional markets and assets driven by culture and scarcity. And this connects directly to crypto because the logic is very similar. We get limited supply, we get strong demand and global market. And that's exactly why we find it interesting and why we're covering the news here on Roxham TV. So we'll take a short break from here. When we come back, we also, of course, we have more crypto news. We're talking about crypto exchange deciding to not to go IPO in this day and age, in this market condition. And we're also going to dive deeper into the crypto KOL scene in Taiwan specifically. So in the APAC, there is regulation kind of going against crypto influencers locally there in Taiwan. So there'll be more stories, more details to give it to you guys here on Roxham TV too. So do stay with us after the break.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
He's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go!
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
How about stretch preferred stock on Roxum? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxum gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxum to your clients. Corporate traders, asset managers, old, young, Stretch on Roxum is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
11.5. We are in heaven at 11.5. 11.5%. 11.5%.
Welcome back to Roxum TV and thanks for sticking around with us after the break. There is now a very important signal from inside the crypto industry. While many crypto companies are rushing to go public, OKX is doing the opposite. They're slowing down instead on purpose. So what just happened? So OKX executives made it very clear. They are not rushing to list in the US. They will only IPO if it creates long-term value. So in simple terms, they don't want to go public just for hype. They want to do it right. So OKX chief marketing officer said something very direct. So if we are not confident, we are not going public. He even shared a personal example that he bought shares of a crypto company, then the stock dropped about 50%. And he said it very clearly. That kind of performance damages the whole industry. And this is not just about one company. This is about how the market sees crypto. Right now, many crypto stocks are very volatile and some are still far below their IPO price. Like for example, like major crypto companies have struggled to hold value after listing. So if we take a look at Coinbase in the past, okay, if we do the 5 years performance, back in 2021 April, it's down 52%. Like in my opinion, like I'm a long-term bull when it comes to Coinbase. I actually think it's a good price to DCA in a little bit, but it's not financial advice, just like what I'm doing personally. But anyways, the concern is still there and very much the volatility is still here. Like if more companies go public too early and perform this badly, it hurts trust in the entire sector. So OKX is doing the opposite. They gave a very strong warning to the entire industry. So they said, if IPOs are treated like quick money grabs, like how ICOs were done in the past, then the industry could damage itself again. This is a very clear message, like don't repeat old mistakes again and again. Instead of rushing to IPO, OKX is focusing on building, and here's what they're doing. Expanding globally across Europe, Asia, and Latin America, strengthening their trading platform, and building deeper liquidity across different markets. And they also highlighted one key advantage. Their system connects global trading flows across different time zones. So when one market sleeps, another one is active, and that keeps liquidity strong. OKX is betting on the future of finance. They're working with ICE, which is the parent company of the New York Stock Exchange. The goal is to bring real-world assets like stocks on-chain. So in simple terms, it is to turn traditional assets into digital tokens, and OKX want to be the platform that distributes them. So the long-term strategy here is more important. OKX OKX is thinking 20 to 30 years, so not short-term hype. The strategy is to build fast, scale globally, and maybe consider IPO later down the line. So here's what it tells us. Not every crypto company wants to rush into public markets. OKX is choosing stability over hype, longevity, so long-term value over short-term attention. And they believe a bad IPO can hurt more than help. Well, personally, I actually have a lot of respect for a decision like this, and it's definitely not easy to make an announcement. All right, so diving deeper into the APAC market, there's also a huge shift going on in the crypto scenes, especially for influencers in Taiwan, because regulators right now are stepping in. They are targeting more specifically towards crypto KOLs giving trading calls. So what just happened is that Taiwan's financial regulators is planning new rules. So their goal is to regulate crypto influencers who give trading advice and control how KOLs promote crypto services just to protect, right now they are trying to protect investors from misleading content. They will use existing financial laws to do such thing. And in recent months, there has been a surge in so-called crypto teachers, signal groups on Telegram or Discord or Line, influencers telling people when to buy and sell. And these groups in Taiwan, they often promise easy profits or show screenshots of fake gains and encourage people to follow trades. And regulators are concerned, like this may mislead investors, this may influence market prices. So under the new plan right now, crypto companies working with KOLs may need formal contracts. Influencers may need to follow compliance rules, and promotions must be clear and not misleading. In simple terms, crypto KOL activity will no longer be a gray area. So in traditional finance, like influencers can freely promote investment products. There are strict rules on advising and also on ads. Right now, crypto is being brought under the same system. So we have actually seen examples like this, like some KOLs will promote platforms without proper registration. They will recruit users using referral codes and encourage trading on unlicensed exchanges. Regulators are now stepping in. So they are responding by issuing warnings, by blocking activities, and also investigating potential legal violations. So the red line is becoming very, very clear. And this is where it gets very serious. Some groups are using tools to fake results, just to fake like some trading screenshots, some fake some profit records, and fake conversation just to create hype. The usual patterns start with small wins to build trust, and then would ask users to deposit some money, then disappear completely. This has caused real losses for many investors. So take a step back for a second. This is not just about influencers. This is about market integrity, investor protection, and also trust in the system. Because right now, too many people rely on someone else's signal instead of doing their own research. And this is still very early, but we are likely to see more rules for crypto marketing, more control over influencer promotions, stronger enforcement on unlicensed platforms. At the same time, a full crypto law framework is still being developed. This would directly affect how viewers get information. If you are following signal groups and if you're watching crypto influencers or copy trade what they do, then this matters a lot, especially if you are a viewer from Taiwan. Because going forward, not all advice will be allowed. Not all promotion will be legal, and some voices may disappear. And that's exactly what we're watching here on Roxham TV. Anyway, so that's pretty much all the stories we have time to cover in today's show. But before you go, make sure to give us a follow on Twitter. So my personal Twitter is jamdramcrypto_io. Make sure to follow Roxham TV as well on Twitter because we have valuable content coming out on an hourly basis, talking about like global news, Bitcoin, of course, geopolitics, and AI. So point being, there's still so much valuable content on X, on Twitter. So make sure to give us a follow and make sure to give us a subscribe on YouTube if you haven't already. As for my show, I'm live here Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my show live, don't worry. The pre-recorded version is also available on both channels. So being Jam Crypto YouTube channel and also Roxham TV YouTube channel. Thank you guys for watching. Have a great day and see you guys in tomorrow's live show.